Hey everybody, this is Ray Halstead and Andrew McMillan with REH CPA. Today we want to talk about uncertain tax positions. When you're preparing your taxes, sometimes people want to take an aggressive position on their taxes, and I've got Andrew McMillan here with me today to talk about, if you're going to take an aggressive position but you want to kind of hedge your bets and not potentially get hit with a large penalty. There's certain things that you can do. Andrew, what can people do to kind of hedge against that?
Yeah, so unfortunately, taxes aren't always black and white. There are some gray areas, and there's times where things aren't super straightforward based on how even the tax law is written. So you can find yourself in a situation where you're a little unsure about what you're doing, and maybe it's a little bit on the side of being a little too aggressive. So what we always go over with our clients is when we feel like they're taking an aggressive position, we want to communicate that to them and talk about their options. One option to be is anytime you're going to take a position, you want to make sure that you have a reasonable basis for having it upheld if ever audited. So reasonable basis, it's a low bar. It's usually a 20% chance of likelihood that it would be upheld under audit. So if you feel like if you were audited and you could show, cite court cases, cite tax law, cite any other IRS regulations, you want to gather the evidence that you have, and if you feel like you have a reasonable basis of more than 20% of that tax position getting upheld, then it's in this bucket of being aggressive, but it's probably a position where every circumstance is different, but you may feel okay moving forward. But even if you go forward with that and you have a 20% chance of likelihood of it getting upheld, and the IRS audits you and they reverse it, you still could get hit with a underpayment penalty, with a substantial underpay, with an accuracy related penalty on your tax return. And so that accuracy related penalty can be, it's usually 10% of the tax liability or $5,000, whichever is greater. So I want to make sure clients understand that penalty could still be in play. So kind of continuing on, the way to be sure that you don't ever have to pay that penalty if you know you're taking an aggressive tax position is to almost like tell on yourself on the tax return, attach a form to the tax return saying, this is what I feel like you guys may have an error with. So not a lot of clients like to do that, but if you want to make sure that you don't have to pay that penalty if you're ever audited, you can attach a form, it's a form 8275 to the face of your tax return, and you can say, this is the position that I'm taking, this is why I feel like it's justifiable, these are the court cases, this is the evidence that I can show of why I think I'm right, and slide that through, and hopefully it never comes up. But there's a chance
which
that
pretty
it
much guarantees that the IRS is going to look at it. You file that form, pretty much guarantees they're going to take a look at it. Whereas if you don't disclose it, you're playing those odds of not being audited, and it just slides through, and they never see it. But if it does get pulled, then you're going to get hit with that really big penalty.
Yeah, it's just balancing the risk reward of every situation. So again, it's not always black and white. The IRS says that if you have that form on your tax return, it doesn't increase your chance of audit, but I don't know how much that's believable. If that form's on the front of I'm sure somebody's going to at least look at it to see if this is going to pass muster or not.
It may not generate an audit automatically, but somebody's going to look at it.
Somebody's eyes are going to be on it. So, it's all risk reward. If you feel real confident about your position, even though it may be aggressive, if you feel real confident about it, maybe it's not a bad idea to put the form on there just so that you won't be on the hook for any penalties, but it's definitely something that you want to talk to your CPA about. Ray, the risk reward. CPAs, they see a lot of tax returns usually, so they can probably help give you some insight on what position you should take here.
Awesome. Very good. Well, if you guys have any questions about a position that you may want to take on a tax return and you're not quite sure, feel free to give us a call and we will help you out. Thank you.